Hey, what's up, everybody? It's Trader Ace here, and today is April 5th, and it's about 10:30 my time, Pacific Standard Time. So I'm hosting this Zoom to go over some of the trades that I took today, and I'll go over what I looked for um, to execute calls and puts. Although we had, this crazy sell-off today, it was just amazing. But you know what? If you guys look at it, if you analyze it, if you guys analyze the charts, it was just a textbook setup. Okay. All you had to do was just go ahead and stay patient and go ahead and just follow through with your plan. Okay. There's no need to say, oh, well, I'm just bearish or I'm just bullish. No, you know what? You have to go ahead and follow the trend. Okay. So, as you know, I like to look at the market as a whole. And every time, pre-market comes, I will come and look at the charts. I will look at our patterns and see what's going on. And so today we had our friends at the Federal Reserve make some statements today. And let's see, I just forget what the heck these people talk about. There's so much nonsense. Okay, so today we had a Fed speaking today at 11 in the morning. And what this had to do with the economic calendar, I don't know. But they spoke about inflation and inequality. The only one that actually mattered today was the Fed President Daly, which spoke today at 12:30. And the other person that spoke at 2 was speaking about health. Totally irrelevant. But nevertheless, whenever someone sees that, they're like, oh, they get so intimidated that they they think that the whole market's going to crash, and that's not really the case. Really, what they do is they're just kind of like a catalyst, and so to help us, kind of get some volatility going on. Okay, but I don't really rely on what they say. But what they said today was just, something that we already knew. Anyways, so let's go ahead and look at the price action. Let's ignore this candle here. Okay, let's assume that this was in here. Okay, let's assume that this didn't even happen. Gosh, let me just. Okay, let's just assume this didn't even happen. Okay, so rule of thumb, right? When you see this pin bar here, although it's red, you want it to be green, but you know what? Just the formation of it is going to tell you that you're expecting a reversal pattern here, okay? Because of the bullish pin bar that we have here. Looks a little similar. And then, although we didn't have an engulfing bullish candle, it was definitely engulfing the previous candle. Was it engulfing this candle? No. But what can you expect? Okay, when you see this pattern, you can expect a continuation to the upside if we open and hold above here, which is like about 457. And sometimes it happens. You know what? We have an uptrend, and we're going to go ahead and make higher highs and higher lows. And we're going to come and retest and just rest for a little bit and to take the price higher. Okay, but that wasn't the case. Okay, we were just a little bit overbought here because we had, an uptrend for about 15 days or so. And we were just in the uptrend, and then we finally topped out here. And then, we had this bearish engulfing, and then we had a rest. Okay, so again, rule of thumb is to wait, for confirmation to go ahead and go long and take calls to the upside, or whatever it is you're doing, but always wait for the price to hold above this candle. Okay, so what happened this morning? the complete opposite. We had a fake out. Okay, so let's go ahead and take a look at what I wrote on my notes today. And I do this every morning, or at least I try to. Okay, and so this is what I said. Okay, we are showing signs of a technical pullback at 453. If we break under 455, you can expect a fake out at the open with a rejection at resistance. Okay, worst case scenario, we just consolidate. Okay, so technically, since we were a little bit overbought, our next area of support is at 453. And then this is our other support at 455. So if we break under that, we're going to go ahead and see a little pullback to 453. And if we hold under 453, then all hell's going to break loose, which it did. Okay, and these are the levels I was looking for at the open. Okay, now what did I notice here at the 4 hour? Okay, because I like to look at the 4 hour. It gives me a clear picture of where the price is going, what's going on. And so really what happened here, what I was looking at was that we had a nice breakout yesterday out of this consolidation. We had a retest and then we just continued. But sometimes we'll continue, but then, other times we'll just consolidate. Okay, we'll consolidate again and then break out to the upside. Okay, and here really what it didn't do that. We had this consolidation here and then we had a very big pullback pre-market, and we couldn't open above the pre-market high, which was here, like around a little bit above 457. So this just told me that, we can expect to go ahead and have a fake out and then continue, pulling back. So if we go to a smaller time frame at the 1 hour, you can see that the buyers were a little exhausted here. Okay, yes, we were holding over support, over our 9 EMA, but really what happened pre-market is that we had this fake out here, and then we just ended up pulling back. And what I noticed is that, we had this bar right here, and then, we were losing momentum. How do I know we were losing momentum? Because of my TTM squeeze down here. Okay, I like to use the TTM squeeze. It lets me know where the momentum is at. And, I'm not going to go too into it, but I'm just going to let you guys know that we were losing momentum. And I saw that, and it made me notice that, hey, you know what, we might just have a fake out since we couldn't hold over our resistance here. And just to keep that in mind. Okay, so if we go to a smaller time frame, the 30-minute, which I'd like to, it was a little tricky to trade. Okay, so what happened in the morning? We opened, let's say markets open, ding, ding, ding. We open, and then we have this, this pump in the morning. But really what I noticed was that we didn't have enough volume, here. We didn't have enough volume here to match our candle, right? And so had we had this kind of volume with this candle, we can expect the price to push higher. And sometimes we'll have breakouts like this. We'll have a bullish engulfing candle, and then we'll have the algos just, have it, go up and up and up and up. But really, that's not what happened here. What happened here is that we topped out here, not once, not twice, but thrice. Okay, we failed to go over our resistance here 3 times. Okay, and if you guys have taken our course, we have gone over the three touch rule. Okay, it's a rule. If your candles If your price touches 3 times and you fail to break out to the upside or to the downside, or I'm sorry, to the upside, then you're gonna want to look for a reversal to the downside. Okay. And yes, I did catch this move here in the morning, although I said take puts under 455, which it did hit, but it didn't hold. Okay. At this time, it did not hold. So what did I do? I saw that the volume started to spike up a little bit. I was taking a look at the tape and the level 2. And really what I did was I executed a trade around here, around 456-ish or so. And then I just brought it all the way to the top. Small position because I was expecting a fake out. It's kind of hard to not get FOMO when you see these crazy spikes. But I said, okay, let me take a little position. That's why I bought like about 3 calls. Only because I was being conservative, because this volume didn't really match the candle. So I was like, okay, whatever. And then came another 15 minutes and we couldn't break above 457. So what did that tell me? That told me that, okay, the buyers are a little exhausted. We can either do one or two things. We can go ahead and retest down here, or we can go ahead and continue to the upside. So since I saw a really huge rejection, I just, took my profit around here, around 457. Wasn't a big move, but nevertheless, I locked in some profits. And then what I did was that I was watching the tape and I saw that the sellers were stepping in very aggressively. Okay, so I took a short around here, a little bit below 456, which was my entry for puts. And then I just wrote it, all the way down. It was a little hard not to take profit, down here, which is usually what you do. But you know what? I was so confident in my trade that I said, you know what? We're going to keep selling. So I'm not really too concerned, about a pullback. I was really confident in my trade, and I followed through with it. Okay, I saw a rejection here, textbook trade, and then I held my puts the whole day. So I wasn't just on the 15-minute. Okay, I was on the 1 hour and the 4-hour chart. But I like to stay on small time frames. The lowest one I'll go is the 15-minute to enter a trade. Okay, but if you zoom out and you go to the 1 hour, you'll see that we had a huge engulfing here. We had a huge fake out. And again, it was a little hard to not take profit here for 453, because that's what I mentioned. If we break under 453, it's a level to keep in mind. Either we break it or we make it. Okay. And then, I stepped away from my computer, and my stop was a little tight when I entered. I set my stop here around 456.60. And guess what? My stop was never hit because I entered around here, around 456 or so. So I entered on the way down once I saw this pressure. And then what happened here, we had the shorts covering. Okay, they were, it was a short squeeze. Let's do SQ, short squeeze. And then what happened here? We couldn't break over this level. We couldn't break over here, and definitely could not touch this resistance point here. So we just rejected and we just kept selling. So we just kept making lower lows and lower highs. That's what we were doing here. Okay. And all these spikes were being shorted, short, definitely. And then we topped out a little below 450. And And that's how I rode this all the way down. Why? Because I used price action. I stayed calm. I didn't force anything. So here, when I took my notes, this is why I like to take notes and you know, to kind of guide me through the markets. And this way I can stick to my plan and it holds me accountable. So I suggest that you guys take notes also. And really what I did, all I did was just follow the bearish pin bar pattern. That's really what it was. It was a price action pattern and textbook trade. And really, again, once you see this, you know, these huge rejections at the top and you see these topping tails, it's telling you that the buyers are not in control. Okay, they're not in control, and the sellers are the ones that are starting to get aggressive here. Okay, this is where you need to start looking for a short. Okay, I took it here in between because I was looking at the tape and the volume was correlating with this candle. And so there are exceptions to the rule, but you have to be a little familiar with stuff like that. And then we have the bearish engulfing that's following. Okay, so what could you have done here differently? Could you have just waited to break under 455? Absolutely. Okay, there's nothing wrong with being late to the party. Okay, totally nothing wrong, as long as you follow through with your plan. And so had you executed here right under 455, which is the next candle following, you know, the hourly, which is like an hour later, you could have totally caught that move also. Let's say you were you got trapped, or you were late, or you woke up late. It happens, you know, it happens to me sometimes. We're all human, we have stuff to do. And so you know, stuff happens, shit happens. Okay, so you could have caught this right here and just wait. There's no reason to be like, oh my God, like you get up late and you're like, oh my goodness, I'm late, I don't know, you know, you're like panicking because you messed up open and now you're scattered. No. Okay, don't stay calm. If you wake up late, no big fucking deal. Okay, just go ahead and look at your chart, you know, do your homework, take your time, be patient, and just wait it out. It's no big deal. Okay, so you could have executed it here and just wrote it all the way down. Okay, no need to get FOMO or, you know, kick yourself in the butt and be like, oh my gosh, I didn't get up, this and that. No. Okay, and again, it's a textbook trade here because it was a pattern. All right, guys. So you have to be a little aware of the what price action patterns. Okay, that's really what it is. You got to be aware of the patterns. That's all it is. It sounds crazy, huh? But you know what? That's really all it takes, is to have some type of recognition, pattern recognition, comprehension on how it works, because really the price action, guys, it supersedes all indicators. Okay, why? Because the price action it's live, you know, it's telling you where the chart is going, where the price is going, as opposed to an indicator. Okay, indicators, as you know, lag. That's just what it does. We lag. Okay, these indicators lag for about 20 minutes. Okay, what the heck are you gonna do? Rely on a crossover, which, you know, you can, but it just takes time. You know, by the time you see the crossover, the whole move is over. Okay, and I used to make that mistake too, be like, oh no, I'm gonna wait till my crossover. No. Okay, these are just tools, indicators. Keep this in mind. Okay, guys, keep this in mind that, and let me write this down. Indicators are tools to assist with support and resistance. Okay, indicators lag for about 20 minutes, give or take. Okay, give or take. And so they're just here to assist you. Okay, like I don't know if you guys are familiar with basketball. I used to play basketball when I was in high school, and you have your assist, right? You have your point guard. And what do you do when you're approaching the basket and you're trying to shoot? Okay, you shoot it off the board. You have someone to assist you to make the shot. It's the same thing, right? You know, these things are just tools. That's really what it is. Don't rely on them 100%. Okay. Get to know the price action patterns, get to know your volume, get to know, you know, how to avoid these fake outs. Okay. Because here, a lot of bulls are trapped, and that's exactly what happened today. Okay. So, a lot of people were holding, and then what happened? You know, if you go to a smaller time frame, people were holding, and then once the the bulls got trapped, they started selling, 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 and they caused a lot of pressure and panic. And then the bears started to step in and just took advantage, took the whole honeypot. They took your stop loss because you didn't execute it correctly. Okay, and it happens, guys. All right, so here we have the level 2. Okay, and I noticed this in the morning, and I was like, wow, the sellers are super aggressive. And I said, I was like, well, let's see where this takes us. We were here, we had our friends here, Al sitting on the bid, and then we also had him here sitting on the ask. Okay, and all morning at the open, like the tape was just insane. Like we had 100 orders, hundreds. Okay, we had hundreds of orders being filled on the ask at the open. I thought it was a little odd. I was like, well, that's a little strange because the volume isn't really, again, I noticed the volume. And so that's why I just took it a little light. And so I took my profit early, and then I noticed that he was still on the ask and also on the bid. I was like, oh, shoot, that's a warning sign. Why? Because here, all they're doing is manipulating the price. That's all they're doing. Okay. They're just manipulating the price at this point. And what happened? 720. I'm sorry, at 715. I told you guys we got faked out. Come, 5 minutes later, what was the price around here? Around 454.50. And then it started to drop. Okay. And this is another thing you guys have to know, how to read price. Okay. I was reading the price and I was like, okay, we're just making lower lows. We're just, can't break over 0.30, 0.40. And then that's when we just started to sell off and just continue and continue. And then, about 2 hours later, we have, again, this guy was just sitting here all freaking day. He was just chilling at this price all day, didn't even change. Okay. He was, in and out, in and out, in and out, but nevertheless, he was just chilling there. And really what they do is, and I'm just going to give you guys like a short, little crash course on level 2 is that, these market makers are here to take your money. Wall Street is here to take your money. And if you don't know these little tricks on how to spot them, they're going to chew you up. Okay. And so we have people that like to rely on the tape a lot, which is okay. But you know what? To me, though, I like to use different things. Okay. What do I rely on? Price action, volume. Okay. And then I'll go into the level 2. I will hardly go into time and sales only because it's very time consuming. And then it's just too much. To me, I just feel like that's just a lot. It's enough with the level 2. There's no need to overwhelm yourself. with a bunch of stuff, you know, because then you get rattled. Okay, so here, you know, what these people were looking at who just rely on the level 2 and the times and sales got faked out because they were like, okay, well, we're going to get filled at 457.49 and we're going to make new highs and we're going to hit 450. Did that happen today? Oh, I'm sorry, we're going to hit 460. No, it didn't. Now, the only time that an order like this is going to make sense to you is if this was filled here. So let's assume, let's just say we had 405 up here. Had this been filled, and then we have, you know, other orders following, hundreds, you know, all of these at 0.20. Okay, because this is just heavy. Let's just assume that all of these were filled. Then you can say, okay, yeah, we're gonna break out to this level. We're gonna break out to 454, 455, and then ultimately hit this level here with this order. But that wasn't the case, guys. Okay, that's not really what we did here. Okay, all we did was, all they did was just fake you out and make you think that we were gonna hit this level when we really didn't. And look, he was on the bid and the ask at 452. And then he left, and then he came back, and then he left. He was just all over the place on the bid. And then come 9:30, what happened? We got a fake out at the open, trapped the bulls, causing a panic sell, and the bears stepped in very aggressively. Okay, the bearish price action confirmed our downtrend, the EMA crossover, and bearish volume. But overall, price action supersedes. Okay, and so had you been paying attention to the price action, then you could have cut this whole move to the downside. Okay, there's no need to overcomplicate things or be a stubborn bull and be like, oh, well, no, I'm in calls. I'm just going to get calls and I'm just going to get calls. No, that's not how it works, guys. It's not what you think. It's not what you want to happen. It's what's in front of the chart. It's what's in front of you. You know, the chart's telling you what the heck's going on. Okay. And then I traded, let's look at the calls that I traded in the morning. Okay. I caught the little AMC pump. And I knew it was going to be short-lived. But you know what? We broke out of this consolidation at 23.20. And I saw that and I was like, okay, I'm gonna wait until it holds. And it held. And we had that crazy pump. But look, we had the volume match this candle. But then, you know what? Since the market was selling off, we couldn't hold over this moving average here, which is the 200. And this is a very strong moving average. And I saw that and I said, you know what, I'm just gonna get out. So I got out. I had a very small gain, like about maybe 5%, but I'd rather have a small gain and lock in profits than have a 50% loss because I'm being stubborn and because I'm hoping that, you know, this is gonna reverse and that this trade is gonna go in my favor. Because I see it retest here and then it just continues to sell. And then I'm at a very big loss, okay? Because AMC has a very high IV. I mean, Jesus, this hasn't gone down since last year, right? Since last year, since the went, you know, parabolic. I haven't seen it, you know, at anything less than 120% in IV at all for the past year. So whenever we have stocks, and that's something else that you guys have to, you know, take into consideration is IV. You can get IV crushed. They don't want to take that risk. No. So I just got out. I didn't really look at it, but this could have been a good short had you guys, you know, played it both ways. It's a stock for every account size. You know, it's pretty cheap. And then I caught X, I caught steel, I caught the plum, Why? Because it made sense to me. Okay, we had the volume, we had a volume spike, we had a crazy candle spike at the 15-minute. And I decided to stay at the 15-minute. I said, okay, I'm going to stay at the 15-minute. If I see a big rejection, I'm going to take profit. And that's what I did. Okay, I took profit around here, around 38. No big deal. All right. CLF, another one. It was an amazing trade. You know, I took a trade here around 32.60, 32.70, and we had a crazy run. And I like to look at my chart. Okay. I saw that, you know, we had broken, or we had, you know, reached consolidation here. We couldn't break over, you know, 33.30. And I said, you know what, we're just going to go ahead and see a nice pump and dump. And that's exactly what happened. So what I did was I took profit up here around 34. Did I look at it again? Nope. I just took my profit and I ran. Okay. Why? Because I was mainly looking at Boeing. I was mainly looking at CAT, the Sqqq, and SPY, obviously. But you know what? BA was my favorite today because it has so much volume. It is so liquid. And I saw these rejections here. I saw that the sector that it belongs to was bearish. And I saw, you know, this bearish movement that the buyers were just exhausted. Although, what did we talk about? We talked about the pin bars, right? Rule of thumb, you know what I mean? Technically, right? It's a reversal candle, right? Yeah, but only if we can hold over. But if you see these rejections here, when you see something like this and you see it open right before, you know, right above it, but then we have a topping tail, that just tells you that the, you know, the sellers are still kind of in control, and you know it's not that safe to swing or to, you know, go a little aggressive on a trade like this. No, just tells you that, you know, they bought the dip, but they're going to dump it. And you know, pre-market came and it just, you know, it just confirmed the downtrend. Okay, although we had a fake out, I was like, okay, we, you know, Boeing is very tricky. And so I'm just gonna go ahead and wait it out, you know, and that's exactly what I did. Okay, so if you go to the 1 hour, look at this beauty, boom, you know, believe I got out around 186 because I didn't want to, you know, lose my profits. And then I said, okay, we're gonna, if we break under this candle, I'm gonna go ahead and re-enter around 185s. And that's exactly what I did. And I wrote it all the way downtown to 183. Okay. Super easy short, super simple. CAT, same pattern, same sector. It was bearish, you know, and with CAT, I was really bearish overall. With CAT, I was patient because it's a little, it is liquid, but not entirely. And so really what I like to do, I just like to wait a little bit. You know, I'll wait the first 15 minutes, even the first 30, you know, depending on where we're at. And so I saw this big rejection. I was like, all right, so I'm just going to wait until 220 retests, which is the following candle here. And I executed my trade, and look, and it worked out lovely. I took profit down here at 217. I sold into momentum, and then I re-entered under that price, and I just wrote it all the way downtown to 215. Boom, easy. Okay, then we have the Sqqq. And look at this. My trigger was around here, 32.30. I executed an auto trade. My stop was down here at 31.90. And although we had this little pullback, my stop was never hit. So it wouldn't make sense to get out of the trade only because it's going against me as soon as I enter. No, guys, that's not how it works. Okay, you have to, you know, be a little aware of what your stops are, okay? And then we had this aggressive volume and I just held it. I sold here. I sold a little early, but you know what? Then I re-entered around here, the following candle, and I just wrote it till the end of the day. The only ticker that I wasn't impressed with was VIX, because I mean, it just looks great, right? I mean, just have an awesome reversal. Like here, we got, faked out. I grabbed some puts yesterday. I day traded some puts right here. But that's all it did. Technically, it's supposed to continue. Well, you know what, the market makers, I don't know what the heck they're doing with VIX, but ever since we had this, this ridiculous spike, it hasn't traded the same. And, that's one thing that I don't like about Wall Street bets, or, when they pump these stocks, because they just mess up the whole technical analysis aspect of it. And then, it just flags your ticker. You're like, Jesus, what the heck, man? It just messed with the whole thing. And I was in these moves, when it happened. But that was it. We have these clear breakdowns, breakouts, but just not strong enough to hold. Okay, so that's what I did here. Everything's pretty straightforward. And then let's take another look at SPY. If you look at the 4-hour, super clear. Okay, awesome. We hit a low of the day at 449.80. And we found support here for now. What can we expect for tomorrow? I'm expecting a short squeeze all the way up to here, maybe even to 453, and then a rejection, and then a continued downtrend. Okay, I'm looking for a target around 444. Or close, to the vicinity, something close. Even if it closes at, 445, I'll be happy with that. But you know what? Let's not be biased, and let's just have the trade come to us so we can execute this properly. Okay, there's no need to get FOMO, because at that point we get sloppy. Okay, so really, I'm just waiting for that. Other than that, that's about it. I will post my watch list tomorrow. If you guys have any questions, just go ahead and send me a DM if you guys want to know anything more. But again, it's pretty straightforward. And here we have an example of some bearish pin bars. This is like the same thing that happened today. We had a pin bar like this, and then this is your sell signal. And why do you think they're pointing to the second candle? Because it's confirmation. Everybody waits. We don't just dive in, when the sharks are saying, no, we want to wait until they're a little gone, and until they're confirmed that they're gone. And then that's when we go ahead and dive into the pool or to the water, whatever. And then look, that's the same thing that happened with SPY. Same thing, guys. Same freaking pattern. We sold off, we had a doji, we based out, and we continue to sell to the down, to the downside, causing pressure. Okay. And then, we could expect, like I said, a consolidation or just a rejection, and then a continued sell off to the downside. That's what we can expect. Okay. Here is a description of, bearish pin bars. They are rejection of higher prices. Bullish pin bars are rejection of lower prices. It's just the complete opposite. That's really what it is. So to know these patterns is really important. I would suggest, if you don't know anything about price action patterns, price action period, you should really do some reading, or you can go ahead and check out our courses. We're also offering mentorship courses if anybody's interested. But overall, you know what? This is the stuff that we look for. Day in and day out, it's the same thing. And once you gain that momentum, you're going to go ahead and, recognize those patterns easy. Easy, okay? So that wraps it up for tonight. Again, if you guys have any questions, let me know, or let any of the analysts know in the room, and we'll be happy to answer your questions. Again, thank you for joining, and I'll see you guys in chat tomorrow.